Hey everyone, welcome back to another episode of the Real Estate Note Show. Would love to talk about today about the most attractive, hottest notes of 2024. Before we do that, I'm your host Dave Putz from JKP Holdings. Alongside me, as always, Nathan Turner. How
Hello,
are you, my
hello.
man? What's going on? What's going on? Hopefully everything's going well.
Going well, going well. Getting pumped for DME. It's
Oh, we're
we're
just a couple months
only
away.
a couple months out.
I know it's exciting, right?
Yeah.
So I think that people who are tuning into us probably heard about it, but I know that if you haven't, if you are an originator or a note buyer, the DME will be the place to go to in end of May. It's down in Nashville, where you can definitely share some details about that. And I think for most people, I'll put the link in the comments right now so people have it. But if you are at all in either those kind of brackets, please feel free to check it out. Take a look at that. I see Josh on Facebook over there saying he'll be there, which is great. Which is really cool. So for those people, 2023 is a kind of a weird time period for a lot of people. Notes were kind of uncertain, right? Real
Yeah,
estate in general was very questionable. We didn't know what was happening. And
very much so.
yeah, we were just in it kind of we didn't know when things were going to fall. We've been talking about it forever, but we're starting to see things start kind of falling apart.
It's coming.
And yeah,
Yeah,
I know we've
it's
been,
coming. We're seeing especially on the commercial side. I was talking to somebody just the other day where he said he has invested into two different apartment syndications and both of them are in foreclosure. And I went, oh, I am so sorry,
oh
man.
my
Like that
God.
is terrible. But when these projects started up at 3%, and now all of a sudden they're having to refinance or their rate goes back up to 7 or 8%,
Yeah,
that's a huge cut to the bottom line for those apartment syndications. So not to say they're all bad or anything like that, but it's showing some weaknesses for sure.
absolutely. In your own portfolio, what have you been seeing? Have things been defaulting, performing? What's your current portfolio looking like?
For me, there hasn't been really much of a change. Still performing. Everyone that has been performing is doing well. I'm finally getting to the end of some really long foreclosures and evictions that have been just taking forever. And so we're finally finishing those up, which is also very exciting.
Yeah.
What do you see anything with property values yet?
No, we're still seeing that the plateau of values either staying the same or bits and pieces of the country still kind of going up in certain areas, which makes no
Yeah.
sense at all. And I think it's that idea that there's not a lot of people out there who are selling and the rates are high, making
Yeah.
it still a seller's market, which is just unbelievable. We're
Yeah.
talking off air. Oh my
I keep
God.
thinking it's going to start dropping off. And so far, same thing. I haven't really seen it drop off very much at all. If
No.
anything, staying just pretty much the same, some gains in some other places. So it's been very interesting.
And days on market's still low, which is just
Yeah.
shocking to me in most parts of the country. And
Yeah.
we've been talking forever now that this is going to happen, and we're all predictors here, right? It doesn't
Yeah.
happen. However, we have been seeing a little trickle in the commercial spaces, right? And there was a 60-minute special on that commercial is going to start falling, and which we completely understand.
Yeah.
It just makes it questionable what will move forward for, and what will be the new wave of investing as we kind of shift. We always have to be pivoting and being aware.
Yeah. We do have somebody, same as last year at DME, we had somebody from the Mortgage Bankers Association. So we've got somebody coming out again this year.
Awesome.
Uh, their predictions last year were pretty much bang on. And
Yep.
so they're really great resource just to see, what they're seeing and just from a macro view, um, some of their predictions so far, they've been pretty bang on. So I'm curious to see what they're going to see this year as well.
Yeah. So as we talk about all these kind of weird times, I know seconds has been a really difficult time right now because not a lot of seconds are available,
Yeah.
performing or not. I know, people come to us and say, "Hey, what are you seeing? And what are the prices of notes going for?" And for those who are originating notes and creating notes, we do hold a private class on for free to show you how to create a note that makes it valuable for a note buyer to buy for the top dollar. So if
Yeah.
you're interested, let us know about that. but we're seeing the fact that there's a lot of notes coming out that are kind of garbage, which is scary. And those who are creating really bad notes, they don't do it purposely. They just kind of do a backdoor. When those things default, I don't know what's going to happen. And we
Right.
hate to see that happen to any investor.
Yeah. Yeah. And it causes major problems down the road. And for somebody that's just creating the note, of course, they're never thinking about in case of default. Not really. You
Yeah.
know, they've got a clause in there in their one-page note document, but how much does that really hold water?
Yeah.
We're actually going to do a show on that here coming up
Yes.
next month with an
Yep.
attorney that'll kind of walk us through and what do you need and what do you not need in your note document.
Yeah, which is crucial for both note buyers as well as originators to know what's proper, what's not
Yeah.
proper, right?
Yeah.
So, you know, we've seen in our time doing this over a decade, both of us doing notes, we've seen transition. For the first 9, 10 years, non-performing was our world. I don't
Yeah.
think buying a performing note looked boring. And
Yeah.
now it's going to flip. We're buying the non-performers are too expensive, and the risk levels there.
Yeah.
But the performing has been pretty solid, right? We've been buying a lot of these things. Some people are buying partials, some people are just buying, but what most people don't realize is that performing notes have the chance to go non-performing. And I think a lot of new investors don't realize that. And it's shocking for
Yeah.
them, which is unfortunate.
And
So,
again, I was speaking with somebody yesterday and he's part of an investing group where they one of the things they talk about is note investing. So he says in the Facebook group, their private Facebook group, some people have bought some performing notes and they've gone non-performing. And so they're like, shoot, now what do I do? And
yeah.
they're totally unprepared for that reality about like what happens when it goes non-performing. So they
Yeah.
have
And they
the next
bought it as
challenge.
a performing note, expecting it to perform forever. And it's
Yep.
like, that's not totally true, right?
Yeah.
So,
Not
but
necessarily. It might.
yes, but you have to be prepared for both sides. And
Yeah.
we do have a class on that, advanced people that you want to build a calculator for both scenarios,
Yeah.
with IRR schedules and debt licenses and all the kind of good about it. If you're interested, feel free to let us know.
Real
This,
quick shout out.
yeah,
I got an email just yesterday, the day before, Marty Granoff, who is
okay.
one of the very first guys I ever heard talk about structured debt and buying structured debt way back in 2009. And I've just always kind of looked up to him. So I sold him a note 5 years ago and I got an email from him just the other day. He'd mentioned he saw me on a podcast and then he said, that note I bought from you, it's still performing. I'm like, yes, I'm so glad.
Wow. High
So
five. But you never
yeah,
know. You
yeah,
never know what a borrower's going to do.
no, no.
Yeah.
So I was really glad because I've always liked Marty and I would hate to be the guy that he's like,
Yeah.
Nathan.
So, I know we say this every time, but reminder, this will be, the podcast will go probably Sunday morning. This will be recorded. It will be on our YouTube channel, the YouTube channel. Feel free to subscribe and all that good stuff, and whatnot. If you look, we're going to have Kevin come on in a second. If you look for Kevin's information, you'll see it in the comments, a link to a form. Just fill it out and you'll get Kevin's information.
Mhm.
Without further ado, let's bring on Mr. Kevin. How are you, my man?
I'm doing great. Good to see you guys.
Yes.
Speaking of guys that I totally admire in the business, my goodness.
Oh, Kevin's one of the good ones, right? And
Absolutely.
Kevin's been, a pivot, a person we kind of go to for a lot of questions. Even those with experience go to Kevin for a lot of questions, curiosities, and whatnot. And we all learn from each other at the same time. Kevin, how long you been in the note game?
Somewhere around 34 years, and I start to measure things, and I was either just married or about to get married. So
My
we're coming
Lord.
up on our 34th wedding anniversary here in April. So
Nice.
somewhere around that time frame. So the very early days of this business, really kind of the genesis of it, just getting started. And it's interesting when you guys were mentioning coming in about 10 years ago. So the story before that, seller financing was the only thing that we really had. We didn't have the bank funnel. We didn't have all these
Sure.
creative stuff that's going on today. It was
Yeah.
all banknotes. And what happened back then was during the Carter administration, you had interest rates at banks. Everybody thinks, 7% is high. It was 18%, and so people were in a position of they wanted to sell their house, but nobody wanted to lock in a 18% 30-year loan. So a lot of people were said, well, I'll finance it for you, and they would finance them at 9%, which back then was a huge deal. You pay 18% to the bank or pay me 9%.
Right.
And, when I first got going and discovered that this is dating myself here, but this is before the internet. This is before cell phones. I had to go to the courthouse and try to find leads of people who did sell or finance notes. And because I started without having any money to buy notes, I basically just wholesaled the notes, what we call brokering the notes. And that's really how I got started in the business all those years ago.
You probably have people on this call, I'm sure you've heard it before, who are not even 34 years old yet. So, that's awesome though, right? How did you get open to the idea of buying notes? Were you a landlord first? Tell us the backstory.
Yeah, as soon as I graduated college, I got into real estate. It was always something I was attracted to. And I started as a commercial real estate appraiser. And I did that for a couple of years. And then I thought, boy, the big money is the real estate sales, So I switched from that, went into real estate sales, and that lasted a year because I committed myself to a year and I didn't make any money. So what I did get was my first investment property, because back then we used to have what's called A&Q loans, assumable non-qualifying. And basically, you just signed a document. You took over the payments. There was nothing else that you had to do. Assumable, non-qualifying. Yeah. And this guy comes into the real estate office. I'm working on a Sunday, working the desk, and he walks in. He had this place, a 2-bedroom, 2.5-bath townhome, and here in Orlando. And I was like, well, I'll buy it. It never got past me, and I just took over the loan, and then had a roommate come in. So that was kind of my start into that world, and I started looking at real estate, more as the investment side of it. But it's tough, right? Even wholesaling properties and borrowing money and all that sort of stuff was tough. And what happened was my wife actually introduced me to a guy who just made about $15,000 on a note deal, which I'd never really heard of. And I'm like, well, what's a note deal? So he explained what it was. And I mean, $15,000 is a lot of money now, but I mean, you go back 34 years ago, it's like, wow, how did you make that? And so we hit it off, and I said, explain the thing to me. And I said, well, man, I'd like to do this as well. So my idea became, because I had a little bit of a marketing sense. Okay. And I said, well, why don't we do this? I'll write a program where we can teach other people how to find the notes, right? How to, complete the form and get all the information about the note. They'll send it in to us, and then we'll get it sold, and we'll make a fee, and they'll make a fee. And that made it scalable. So we started doing that in that program. I mean, this is back when the program was in 3-ring binder, with cassette tapes. For those who don't know what a cassette tapes are, because I know that's just before CDs. All that, before live streaming, before streaming. So it was all in cassette tapes, but I taught people how to do that. So as they got in the program, of course, that became our national bird dog network. So we went from really a brand new company to, within 6 months, we were probably a top 20. 6 months after that, we were a top 5 company, and always was from then on, because I had so many people doing that. And again, awesome. Everybody was making money throughout the whole funnel, but that's what made it, scalable into a larger business.
Wow. So for those who are out there who are looking to broker, there are good ways and bad ways to broker. Do yourself a favor, listen to the people who are doing it, because please don't broker other people's notes. You may not have permission to do it. You may be in a spot where you don't want to be. So do it right. Ask people how to do it correctly, and you'll get a good idea. Kevin, when you got into it, were you buying in particular states? Were you buying in focus areas?
We went nationwide. So what it used to be, we had to go to the courthouse, and I'm talking going through microfilm. Again, microfilm is something that some of you don't know what the heck that is, but it's basically a clear tape that you're in front of a screen and just scrolling through looking for somebody who owns a note, And that's how we started. And then thankfully, a list company came around. So internet and stuff was starting to come around, and some of the stuff got online. So we were able to buy lists of people who sold a note. Now, we didn't know, or excuse me, people who created a note. We didn't know if they wanted to sell or not, but that's what we had to do. So we would go out and contact them, by phone and things like that, and see if they wanted to sell. And then we went to the big brokers, some of which are still around. I mean, Finac has been doing that for 40 years. I mean, so they were one of the original companies. They're still around. Some of the other ones, interestingly enough, Metropolitan out of Spokane, Washington was a big one. But when the founder died, his kids didn't want to take it over. And that kind of splintered some other people. You might know Allied, Allied Servicing Company. They came from there.
Oh, wow.
Did they?
Bob Repass from Revolve Capital now. He came from there.
Wow, I did not know that.
Yeah. So there was a lot of things that splintered out of that as well. So it is interesting to see that there's still a handful of us that
that's awesome.
back in those days. Yeah, it's pretty wild. We were doing some interesting things too. It wasn't just because we had finite inventory back then.
Yeah.
How many people did seller financing, and then of those, how many wanted to sell that? It was a finite amount of leads, and at some point in time, it kind of burnt through. There just wasn't enough inventory left. And I even left the business too and got involved. A lot of people know me from Notes, but I've done 150 rehabs. I did money lending, landlord stuff. So I've done a lot within real estate. But it always led me back to Notes ultimately as what I think is the best area to focus on. But the inventory shifts and everything completely changes, and that's where you have to adapt and have a good understanding, because not only were we buying the real estate notes, but we bought lottery winnings, casino winnings, professional athlete contracts, cellular phone tower leases, billboard leases. I mean, just stuff you wouldn't even think of. But the common denominator is, just like in real estate notes, what's the collateral? How much is it worth? How quickly might we be able to sell it if we take it back? And what am I investing? So whether it's a professional athlete's contract or, any of those other things I mentioned, record royalties, I mean, all kinds of stuff,
So
it's all just what's it backed by? What are we investing? What's our return? The same principle apply to real estate notes. Yeah,
absolutely. That's cool. I'd never branched out that far, right? I think it's amazing. You have to have a lot of skill set to know the other aspects, right? But it comes down to being a note. What is it secured by? What's my collateral? And how can I get back if something happens? Yeah.
We bought, one of the deals fell through. It was a professional football player, and he was a lineman. He was making about $600,000 a year, and they get paid 1/16 throughout the football season. That's how it works. And the standard NFL contract is really only 2 pages. That's all it is. Now, if you're a superstar, there's an addendum, that's 10 times as big, saying that doesn't apply to me, this doesn't apply to me. And that. So the same concept that we utilize in that we apply, I should say, in looking at real estate is, well, what are the risks? What do I have to protect myself? So in the case of a professional athlete NFL contract with this guy, he wanted to sell next year's salary for today. So mathematically, we can do that. What would we pay today, in now, and then get that money 1/16 during the football season. But there were 2 other things I need to look at in the contract. It's so important to read these contracts, everybody, when you're doing due diligence. You have to know what you're buying. A lot of real estate investors go to a closing table and just sign. They never read what's in there.
Of course.
In the note business, that is what you're buying. You have to know what's in there. So the NFL contract, for example, as a parallel, there were 2 things of concern. One was, it says very vaguely, by the way, that his on and off field behavior has to be up to team standards.
Okay.
It just says team standards. Well, what does that mean?
What's that?
Can they change those standards? You know what I mean? And so we got to protect ourselves. The other one was, your fitness level has to be up to team standards, which again can change. So identifying that risk, how do we cover it? Well, same thing in real estate. Insurance covers some of these things. Right. So we always make sure that our collateral is insured in case it burns down the house and all that sort of stuff to protect our investment. In this case, had to get a Lloyd's of London policy to cover that in case, he gets in a fight or something, outside of the football field. The contract is null and void, So a lot of the same parallels, you run your numbers, you look at what the risk is, you identify what you might be able to do to cover that risk. And then of course you always have the unknown risk, as you guys were talking about earlier, the economy. We can't control that part of it, but there are certain risks that we absolutely can control.